Good morning, traders. It is Monday, December the 16th. Taking a look at the charts, we don't have a whole lot of price action going on this morning. We've got more or less the equities market. We saw these candles start to go orange here last week, Thursday, Friday, indicating that we have some cycles. The momentum overall in this bigger upward picture here is starting to show possible signs that there is a trend reversal starting to build. That being said, a lot of times you'll see these dips get into orange and you'll see the market recover and take off to new highs, and it's almost like these orange areas where you get a deeper consolidation. You get this one, two, three, this three-wave correction, which I talked about when I think we were over here pushing up to the high, hitting our first target. And the reason why we put our protective stops at break even is because a lot of times you do get these three-wave corrections, really shakes the market out, puts a damper on the overall upward momentum, and it's actually rejuvenating the market, and we could see it take off to these recent highs and actually go way beyond that. So hopefully we see this pullback. Hopefully we see some more legs on it. We see it start to continue to come up, and we don't see a triple top. Instead, we see it break through and continue to take off into the holiday weekend here. Now, if we just take a look at the more recent price action, this is the 10-minute futures chart. You can see here we ended up getting in right over here down on these lower tweezers here. Literally the market came down to the low and we got long at the 1800 mark. The market's chopped around here for a couple of days, showing some volatility. Last night we saw the market dump out, and now it's recovering. It looks like it's almost like a final shakeout here, which is what I've pointed out last week. A lot of times you'll see a big kind of shakeout in the market, and then it'll take off without you. It looks as though that's kind of what happened in overnight trading. Anyways, this morning we're seeing the market rip back up to the upside. We're pushing to some new temporary highs, and we're actually somewhat in the money at this point. Now, that being said, if you notice the volume here on the futures contract, it is diminishing to almost nothing, and that is because we are in the week of the contract rollover. So money's flowing out of this contract and is rolling into the next month contract. So possibly today or tomorrow, we'll see how things kind of unfold, but eventually we're going to have to, Friday this contract expires, so we're going to, if we're still in a position, we will close it out and quickly just buy right into the next contract, and it really won't make a difference in the overall position other than a small ticket charge, depending on what your brokerage charge, $2.50 or so if you're in a futures contract, $5 for most brokers, but we'll just roll to the next contract. Anyways, let's take a quick look at energies and the rest of the market. Again, not a whole lot of movement this morning. The only really movement is in the SP 500, which I just showed you. We're seeing here crude oil came down to these support trend lines, and it's had a bounce. It's consolidating here. If it can flag out here for a little bit, it looks like we're starting to get a little bit of a bounce this morning off that support line. More or less, you got to remember the market moves in apartment building style floors and ceilings. You come down, you hit the floor, you bounce a bit, and then if the trend is down, generally you're going to break down through the next floor, you're going to hit it, bounce around, and then of course break through a roof and then bounce off that roof. That becomes the floor. So we're starting to get a bounce here. It looks as though crude oil could chop around here sideways for a little bit, build a little bit of maybe a cup and handle pattern here, and then could continue to the upside. Now, let's take a look at natural gas real quick. Natural gas actually is a big mover this morning. I forgot about that. We're seeing it trade down about 3.5% or so. The 60-minute chart really doesn't seem to show much of it. This is the continuous contract. If I just go to, let's pull up UNG real quick here. Maybe I was looking under a different contract before. Anyways, it looked like natural gas was way down this morning. I'm not sure what I had up on the platform. Anyways, natural gas seems to be holding up fairly tight on this pattern here. I'm going to look into that more, but anyways, not looking to really get involved in natural gas. If we just go to the daily chart, you can see here, this is UNG contract, but overall, let me just pull up here we go. Here's the natural gas daily chart. You can see a huge breakdown this morning. We've had this massive run to the upside, and again, a long time ago we were looking at this broadening formation where the market was starting to broaden out here. We were looking for a topping pattern to form, and instead we didn't get a topping pattern. There was a tight consolidation, and then it exploded to the upside, picked up speed, and now we're starting to see a crack to the downside. So let's just drop down to the 4-hour chart real quick. You'll get more of a visual. That's why this is a regular trading average chart. Let me just change the time frame to 24-hour. Here we go. Okay, so then we'll go back to 60-minute chart. Sorry about that. And zoom back out. Okay, so here we go. Here we've had the last several weeks here, big run to the upside in natural gas. Got a big gap down more or less this morning. Had a little bit of a bear flag. Looks like it's extending to the downside. Simple measured move here. You've got a break to the downside, a bear flag, which is usually just a consolidation within a trend. This same move from this high to the low, you can take that same move, measure to the downside. Be looking at a move still that can continue all the way down to about the 410, which will be somewhere right around this support zone, where it should find some support down around the 410 here. Now overall, if this pattern, if we start to see a larger bear flag start to form and go up here and consolidate for a while, it could be a good shorting opportunity to the downside. This is usually when you get a huge gap, big sell-off, you'll see it usually retrace half if not more of that move and come up and test the previous highs, but usually that big gap, that big sell-off is usually the trend reversal, the real break in the trend, signaling that okay, this run is done and now it's eventually going to start to head lower. Taking a look at the UUP, the US Dollar Index, it's been chopping around here. We did come all the way down to near short-term supports, having a little bit of a bounce. Again, the overall picture in the US Dollar Index, go to the daily chart, it's more or less a pretty strong downtrend with some big series of some large bounces. Now overall, continuing to trend down, and really it looks as though it could continue to bounce a bit more, could come back up to the 2170 area, but again, not really any insight with the US Dollar Index movement this year. Now taking a look at precious metals, here is the gold chart. Gold's been chopping around down here for a while. We had some pretty strong buying volume going on. It still continues to stay under pressure though. Anytime it pops to new highs or makes a bear flag, it usually follows through on its downtrend, and sellers come back in, push it down. Silver's doing the same thing. There really isn't any excitement going on in gold and silver. They're just bouncing bottom here and still continuing to underperform. Now if we take a look at miners, pretty much the same thing again. In a clear downtrend, any bounce gets sold right back into, and really the market is just consolidating here. Again, the market sideways, consolidation, or sell-off, consolidation, sell-off, consolidation, sell-off, possibly even a bigger consolidation here. We still have yet to even break these previous highs, so we're still really, this could just be a bigger consolidation, and then we see a huge move to the downside. Now taking a quick look at the chart of bonds. Bond prices kind of been bouncing bottom here from this previous low, and really not a whole lot of insight. We're kind of looking for more of a bigger picture, not looking to pick a bottom in it. We're looking for a major basing pattern to play out here. Again, we did have this low kind of squeezed out here. That was a news related spike. It did recover firmly back up there, so you could say this is still a stage 1 basing pattern. A lot of work needs to be done though. Really, it could come up, it can trade around here for a while in a tight range, build some stability, some power, and then from there a breakout to the upside could be fairly significant, but that is a long ways away. Right now the trend here is down, and we're not looking to pick a bottom because this could easily just continue another big down leg. We've got to move down, a flag, and it could continue down very easily. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.